Good afternoon, everyone. Thank you for joining us on our third DDO webinar. My name's Charmaine Breeden. I work under Phil Blackmore, who you will have seen his face in our previous two webinars. He will be joining us later today as well, but I'm taking the lead on kicking off today's session. As I mentioned, it's our third webinar that we've held for our client base, the Perpetual Corporate Trust client base, and we're very pleased today to provide a bit of a deeper dive into the target market determination template itself. Joining us, we have Diane and Michael, who we've got their faces up on a slide for you later, but they're obviously experts in the TMD space. They've been working on the template and working with ASIC for quite some time, and we're very pleased to have them today with us to talk through the TMD. The purpose of this session is really to provide a bit of an update on the journey that we've had so far. I know we've communicated that through a number of different client comms and previous webinars, but we want to give you an update on where we're at with that at this point in time. We also want to go through the TMD template itself. So we've brought up, we'll be bringing up, I should say, the actual final template on the screen, and both Michael and Diane will be speaking to that. The purpose, again, we have asked clients to provide their draft TMDs to us as of a little while ago, and we are finding there are a couple of stragglers in this space with this particular task. So we thought that it would be helpful to provide an additional resource to close off on any of the unanswered questions around how the TMD should be completed. I guess what I would like to start off by saying is that the ASIC has said that DDO will be an iterative process, and they are going to take a consultative approach. So the good news is, no matter what your draft TMD looks like today, it will be refined over the coming weeks through a number of key steps that we'll work through with you. And essentially, we'll have it in a version that's available to be published not only to platforms, but to the broader market in a PDF format come the DDO deadline. So I guess I'll just give a very quick context or a bit of an update on where we have gotten to now. Morgan, if you're happy to put up slide 1. Thank you. So a couple of points I really wanted to highlight at this stage. So as I mentioned, we did ask for draft TMDs to be provided a number of weeks ago. What we're really looking to do is to receive all of those TMDs in close to final format by no later than the 25th of June. So that's this week, Friday this week. So the intention of this session is to close off on those queries that you might have, put what you've learned into practice, or make any updates that you might see necessary to the draft TMDs that you've already provided or maybe working on behind the scenes, and make sure you email them through to our DDO inbox and also CC your client service manager. So again, that will be this Friday, the 25th of June. Something I wanted to touch on quickly, because we have had a number of questions around this, is just to remind people that the requirement for a TMD is determined on both a fund basis and a class basis. So as we know, funds may have multiple classes, and only some of those classes may be issued through a PDS. It's the classes that are issued through the PDS that actually enliven the requirement to have a TMD. When it comes to the operational side of that, so how that will look in your final TMD document and also the data file, we're having ongoing discussions with FE Fund Info around what that will look like. But our current understanding is that if a TMD is appropriate for more than one class of units, then you can include more than one APIR code in that single TMD document and tick the box of completing a TMD for both of those classes where relevant. At a very, very brief level, again, if your class of units or your fund is issued pursuant to a PDS, then it is our working assumption or starting point that a TMD is required. Now, there are some minor exceptions to that rule, particularly where the class of units is only made available to wholesale investors. However, the tests that we would apply and ask for you to demonstrate to us, there is quite a high bar on that. So if we are coming back and forth with you with additional questions, it's because we're looking to ascertain that your classes of units or funds are certainly out of scope. For day one, we're taking the approach that if you have a PDS, you are in scope unless we have separately agreed with you otherwise that your class or fund is out of scope. If in doubt, please reach out to your client service manager. We've been having these conversations for a number of weeks now. So thank you to everyone who has already had those discussions with us and has already provided the draft TMD. But we do have a cheat sheet that we're working out on for those last minute decisions that need to be made. The final point that I wanted to make before going through the agenda is really a reminder that the importance of the TMD is significant. And if the platforms are unable to receive a draft TMD and be able to assess and digest what your TMD means over the coming weeks, it does put the fund at risk of the platforms not being able to have that fund available in as broad of a distribution strategy as you may wish. We can delve into that in greater detail. If you are concerned, please reach out to us. So on the right-hand side of the slide one, I've just summarised our progress to date. For everyone who's joined us already, I'm sure you'll be familiar with these points, but just to reiterate for those who may not have been able to attend previous sessions. So we actually engaged Mintus to obtain external legal advice on the scope and obligations under DDO. We've also made a decision to implement the FSC TMD template. And on behalf of our clients, we've made licensing arrangements to enable you to gain access to that TMD. You will have seen those TMDs come through in a number of different comms from us. And the reason for that is, as Michael will explain in a little bit of detail later, that there has been a substantial amount of work put into refining the TMD template that you see today. So we've shared that with you along the way as drafts have been made available through the FSC to enable you to familiarise yourself with that document. The good news is that version 1.0 for day one of DDO being the 5th of October 2021, for those who don't have that date already burned into their brains, that version is now available for people to finalise or at least come close to finalising their draft TMDs on. I will make sure that's shared with you for anyone who hasn't already received it following this webinar. We've also coordinated a partnership with FE Fund Info for the creation of the TMD. To provide a very brief summary, the TMD will take two forms. It will be a data file, which is, from what I've been told, a data file format that has been agreed between both Financial Express and Morningstar, who represent the vast majority of the market, including the platform market. And so that will actually enable platforms and any other relevant distributors to take the TMD in a format that they can then interpret, understand, and apply to their platforms. We can talk a little bit more about that later. The second version is the PDF version, which will have your company branding on it. It will have a disclaimer that will be provided or guided by Perpetual, and it will be in a look and feel that is more consumer friendly. Although this document, as Diane likes to remind us, is not intended to be end client facing, it will be public facing. So advisors and other distributors and platforms will obviously be looking at this document. So to present the version that we have today through the FSC, it won't look amazing. So we're looking at making sure that there's a more public friendly version. We've also held a number of one-on-one client meetings with Diane before this session to make sure that clients who had already drafted TMDs and sent them to us were comfortable about the decisions that they had made, and to really give a bit of a sense check on the TMD completion to date. So that's what this session is for, to really close off on that loop as well. We've secured internal resources and also support for project delivery and also for the update of agreements. Now, this particular point, in line with the approach that we're looking to take with platforms that's been discussed, and also the drafting of our product governance arrangements, will be talked about by Phil later in today's session. I just wanted to flag that up front. And of course, we've engaged with you on an ongoing basis through client comms and also through our previous two webinars. So that's kind of my welcome completed. I think we'll move on to the next slide. I just wanted to share some TMD insights from a Perpetual perspective, and then I'll hand over to Michael and Diane to actually talk to the template itself, and we'll run through an example completed TMD. I'll then hand over to Phil to talk about those items that I just mentioned in blue on the right-hand side and share any other key messages that he wanted to share at this point. We'll close off with a few Q&As that have been submitted to us prior to now, and then we'll close. A reminder that this session is recorded per all of our previous sessions, the intention being that you can replay this to your heart's content and watch it over and over until you're in a point where you're comfortable with the idea or the approach that we're taking to TMDs. Great. Okay, so just before we hand over to Diane and Michael, I thought I would give a little bit of background around the approach that we're taking to TMDs at Perpetual. And again, Phil will obviously cover off on some of this later in the session. So just a reminder, we've chosen the FSC template as it represents a broad industry approach. Key for us, given the number of clients and products that we have, we're thinking at this stage it's around 120 to 150 funds or classes of units across around 50 clients. Obviously, that is quite a task to make sure that everyone has their TMDs completed on time and in the format that we would expect or require. So what we've done is we've allowed the FSC through their many, many working groups with key members of the industry to actually meet and decide on what that template looks like. They're certainly more the experts on this than we are, and we felt that it was necessary to take that approach so that we could focus on all of the other aspects of DDO that we need to implement. Financial Express, as I mentioned earlier, will be our technology partner to facilitate the production of the PDF TMD template. Now, that PDF will be able to be sent out to the broader market via email or a number of other ways, including by URL. Anyone can pick up that URL at any time and view that PDF version of the TMD template, and that will ensure that we're meeting that requirement to make the TMD publicly available. The other aspect of the FE component, I guess, is that they will be using the data file that I briefly mentioned earlier to ensure that their system ingests that file, and they will then perform a validation on the content of that document before it is transitioned into the PDF version of the document. So that makes sure that any changes to the TMD from a previous version, say, that might represent a review trigger, for example, will be made aware to both us and yourselves, and that will effectively trigger, I guess, it will provide a prompt for us to take another look at your TMD. A few key points that I would mention, and I think Phil will probably talk to this a little bit more later. We are expecting that as part of our governance and oversight of these TMDs, notwithstanding that they have been drafted by you in the first instance, as the people that best understand the product and where the product should be distributed. But we will, of course, have an oversight and governance overlay to this whole process. It is likely that we will provide some form of a memo to assist you in telling us how it is that you got to the conclusions that you got to, how it was that you made the decisions to complete a field in a certain way. And we know there's a red, amber, green rating approach that's been taken through the FSC template, but this will really give us the critical information that we need to ensure that you have put sufficient thought into the decisions made. There will be aspects of the TMD that Perpetual will form a view on itself. And some of those areas are things like periodic reviews, review triggers and the way they're interpreted. And there will obviously be some other areas as well, such as the risk rating. And hopefully Phil can speak a little bit more to that later. A key point that I just wanted to make as well, and Diane has articulated this very helpfully on a number of occasions. The TMD needs to be clearly understood by the market, not only platforms, but anyone else that's reading the document. So to date, we've seen a lot of the TMDs, the content on the right-hand side being completed by inserting content from the PDS. we would encourage clients to enhance that description field with further insights to what you might see in the PDS, and that will really help the market understand what it is that you're trying to say. It needs to be in a form that people can actually understand what it is that you're trying to get through to the market. So not just simply cut and paste. We'll also talk a little bit to distribution conditions. So that will be discussed through Phil. And we know that's in particular something that comes up a lot. One thing I just wanted to mention was there has been a lot of questions around funds which are only targeting personal advice channels. Now, whilst there will still be a requirement to have a target market determination if the product meets that criteria of having a PDS and being made available to retail investors, in the context that an investment manager is happy to continue to simply distribute those funds or those classes of those funds to personal advice channels, we can use the distribution condition section to really narrow down that scope. There's been a lot of questions around platform readiness to adhere to that obligation or that condition that we set. And we see that as the easiest solution for platforms to implement. They are aware that this is something that's likely to occur across a vast majority or a relatively large portion of our funds and their TMDs. And so this is something that we are confident that they will be able to implement. The final thing that I wanted to say is that we have an obligation to draft TMDs and to clearly articulate who the target market is meant to be. And the platforms as distributors have the obligation to interpret that, which goes back to why it's so important for us to provide sufficient lead time to platforms and distributors and the market in general as to what our TMDs look like. That's pretty much it for me. I just wanted to hand over now to Michael Potter from the FSC. I'm sure you've all seen his name before and hopefully his face. And I just wanted to hand over for him to give a bit of an update on the background of the TMD, a bit of the history behind the TMD, perhaps raise some of the challenges that he's seen in putting the TMD together and getting to this point. And then he's going to run through an example template. Please take as many notes as you need to, or as I said, you can watch this recording later. And then once Michael's finished, we'll hand over to Diane to share some further insights on the TMD itself. Over to you, Michael.
Thanks very much. It's great to be here with everybody today. So I'm going to be going through an example completed TMD based upon the template. So I need to be clear, there are sort of two documents which you will see. So first of all, there's the template. What I'm showing you here is actually not the template itself. It is a version of a TMD that has been completed from the template, but follows the template quite exactly. We thought this would be a useful way of showing actually what a TMD, once it's completed, might look like. The TMD template, just to expand on that a little bit, will have a lot of instructions in it. This document does not have the instructions. So it makes it clear that when you're actually completing a TMD, that all of the instructions will go. So I might jump into the example, which you should be seeing on screen right now, and explain how the parts of the document and how it is come together. So first of all, you'll see at the top of the screen, it's got our logo. This example has got our logo, but in the actual TMDs, which everybody completes themselves, it won't have our logo, it'll have your logo. So all the way through, you'll see things which are talking about us. And of course, they have to be replaced with the product issuer's identification. Now, and so going into the actual more body of the document, first of all, we've got a legal disclaimer. Now, the reason why we put this in is to make it clear what the TMD is and also what the TMD is not. One of the things it talks about here is the TMD not being a product disclosure statement or a PDS. And so we've heard earlier from Charmaine, this document is not designed for customers, but customers can easily access this document. And so that's why I thought it was useful to have some text along these lines at the start of explaining exactly what a TMD is and is not. And we've had lawyers work through all of this. However, of course, we don't actually provide a sort of a legal guarantee on this document. And also another important point is, while this is a template, it is guidance to people for how to complete a TMD. There's no obligation on anybody to use any text in this document. We're not requiring it to be used in any particular way. So it is up to issuers, and Charmaine will talk about how that works through. So next, after we've got the legal disclaimer, next we work on to an important section which is called the target market summary. This actually is a summary of some of the critical points that are made later in the TMD. And you'll see in this one, there are certain words that are highlighted in blue. They're the ones which are actually related to the text which is further down. So when we see customers seeking capital growth, that capital growth actually reflects some of the characteristics of the product, which we will see later. And this is, I think, a particularly important point. So it sort of summarises the key parts of the target market for the product. But it is just reflecting what is lower, so you can always go lower and see the further detail, much more detail about who the product is suitable and is not suitable for. Then we get to the key identifiers for the product. So we've got the ABN for the issuer and the AFSL for the issuer, and you've got a section here for market identifier code and product exchange code if the product is listed. A lot of products won't be, so as you can see, you put NA, or you can just leave those out. Then you put some other codes for identification. On the right here, we have the date the TMD was approved for issue, the TMD version number, and the status, whether it's current or not. So the version number is important because if you do a review of your TMD and it changes, you need to update the number here so that people will know which TMD to refer to, particularly distributors will know which TMD to refer to there. Then we'll get on to we get onto the bit which actually leads into the main bit describing the target market. Now, in every section here, we've actually put a reference to the part of the Act that requires this section. So that's really useful to understand that this is actually following the structure of the legislation, the way it works. Now, as Charmaine mentioned, we've got this red, amber, green rating approach. An alternative would have been to say for each customer characteristic, you're in or you're out completely. So it was black or white, which would mean green or red in this colouring scheme. But we decided to put an amber in the middle here because ASIC, our reading of ASIC's regulatory guide is that there's degrees to which you can be inside and outside a target market. And there are some things where it's grey, particularly in a funds management world. In an insurance product, it can be fairly black or white, whether somebody can claim or somebody cannot claim. But in funds management, there's a degree, shades of grey, and that's why we thought it would be quite useful to have an amber in the middle. And we can talk a bit more about that in a second. Then there are instructions here. These instructions are both for issuers and distributors about how the TMD indicator system works. Then there's some important new text. If you've been following over time, you'll see that this is a new section in the template. When we actually worked through a process with our members of working through a number of TMDs, and we saw that there was some degree of misunderstanding. So we put this in. It's quite an important point. If you've got a customer who is, say, got a medium risk rating, that does not mean that every fund has to be medium rated. You can have a mix. So a medium rating for a customer might mean that some products are rated medium risk, some are high and some are low, but the portfolio as a whole, seen together, is got a medium risk. And that's really important, particularly for distributors when they're looking at deciding who should be in a product. The portfolio as a whole needs to be medium risk, but you don't have to have every single product being medium risk. That's particularly important in the risk space. Now we get on to the actual customer attributes. As we saw earlier, in the summary, it said this was a capital growth product, and that's consistent with what you hear. So on the attribute capital growth, the product has been rated green. And so what that means is a customer who is seeking capital growth, this product is suitable for them. But then on the next row, you see capital preservation. If the customer was wanting capital preservation, this product is not suitable for them. And then we've got an example of an amber rating here for income distribution. So this product may or may not be suitable for somebody who's rated income distribution. If the person's wanting income distribution, you don't automatically say this product is not suitable. It depends. If there are a number of ambers, then perhaps you'd say that they're not suitable. So that's how we thought about how each one of these would work. And over here, ASIC has said that they do want to have an explanation of the product's key attributes. So in the third column, you put a bit of a description about how the product relates to the particular characteristics we've got on the left. And I won't go through each of these. It's because it's reasonably self-explanatory. And where it isn't self-explanatory, we've got some detailed definitions at the end. And the definitions at the end are really useful, I think, for issuers and distributors, particularly if they're not understanding a concept. Some of these terms are fairly standard, but there might be some uncertainty about how they work specifically. The definitions, I think, can really help in that regard. And so we've got the next section is about the percentage of investable assets that should be in a product. A product which is very well diversified might be able to be a solution or a standalone product. And a product which is very undiversified, so it's very, very specific, is going to be something where you would probably see it would be more appropriate to be a satellite allocation. So like a hedge fund, for example, you might say that a hedge fund is going to be more suitable to be a satellite product. So you may, if for a hedge fund, you might see it's green for satellite and red or amber for the other two. Then I won't go through each of these because it's all defined. We can go through these in questions if people want to have discussions. We've got investment time frame. We've got the risk and return profile. Notice here, we've actually got a specific way to calculate that. That's in the definitions. Again, these are suggestions about how funds might want to do this. And it's something interesting here is that the person who's filled this in has not decided to go green straight to red. They've got a bit in the middle. So this is, again, an example of where it's not funds are not black or white. And then lastly, the last part of this section of defining the target market for the product is going through the need to withdraw money. And this product money is available daily, so it's going to be green for all of the options. Then, as you may know, ASIC has asked for an appropriateness section to be completed. And again, this is template words, so it's up to issuers if they wish to change this, but we've put in some suggestions here about how to complete this. This is not a legal requirement, it's a requirement that ASIC put in its regulatory guide. Then we've got distribution conditions, and Charmaine talked about them earlier. This product, because it's it's not a particularly complicated product. It's fairly diversified. There's no distribution conditions, but as Charmaine mentioned earlier, there are a lot of funds where the conditions are that it can only be distributed through financial advice. If that were the condition, you put it here. Then the review triggers, these are required by law. We've actually got a number here. I won't go through all of these, but we spent a lot of time thinking about these and thinking about how they would work, trying to make sure that they cover all the legal requirements, but not being excessively long. As you probably know, the more review triggers, the more often they'll be triggered, and you'll have to be reviewing your products more often. And that could be quite disruptive to your operations. There are some fairly standard review triggers here. A lot of them are based upon what we've seen from ASIC's regulatory guide. And I'll just highlight one. The review trigger is the use of the product intervention powers that affects the product. And another one here is the determination by the issuer of an ASIC reportable significant dealing. So I'll give you an example of some of the things which we worked through here. We actually said if an earlier version said a distributor reports to you a significant dealing, but we actually decided to move away from that and say it's an ASIC reportable significant dealing. So that means when the issuer determines that they should report to ASIC a significant dealing has occurred, that's when it's a review trigger. It's not if you receive a review trigger from a distributor, because particularly for large funds, a significant dealing from one of your distributors may not mean that you need to report anything to ASIC. And we said in that case, that may not need to be a review trigger. So that's an example of the thought process we went through on the review triggers. Then on the mandatory review periods, we've got an initial review and a subsequent review. There's some thinking that needs to go into this. So this is just an example of how this particular product has come up. In the template, you'll see that there's a fair bit more text there. So every product needs to have its own determination on this. And there are a range of considerations with that. So like a more complicated product, you probably need to review more frequently, for example. Then we've got the reporting requirements that are distributors. And it's basically three. There is the complaints, significant dealings, and dealings outside the target market. Now, the complaints, complaints and significant dealing is largely a legislative requirement, so these have to be in. The only thing which is not in the legislation is the requirement to report the content of complaints. But ASIC made it pretty clear that they did want that included in the reporting requirements. The only thing which is not in legislation is the reporting of dealings outside the target market. Now, again, here's something which we've progressed our thinking over time. Initially, we said report on all dealings outside target market, full stop. But we've now put in the important words at the start, to the extent the distributor is aware of the dealings. And this is particularly important for platforms. Platforms will not necessarily know whether a dealing is inside or outside target market. And if they don't know, there's no requirement on them to report anything here. So that's another thing which we've developed our thinking over time. Then after that, we've got some important section here where you actually put in the way that complaints and all of these reporting requirements need to be reported to the issuer. And we have actually developed data standards for this, and FE, Fundinfo, is actually using some of our data standards. So I understand that that'll be what they're using in their work with people on this call. But we've got quite a big set of data standards that we've worked through, and we're encouraging people to use them. But of course, it's up to individuals, issuers, as to whether they choose to use these standards or not. And then before we get onto the attachment, there's just a simple disclaimer. You'll see our template. We've got a disclaimer ourselves. This is the FSC. We've got a disclaimer. You need to take that out and replace that with your own legal disclaimer if you choose to put one in. And then finally, we've got the definitions. They're fairly substantial here, and we spent quite a bit of time working through them. I won't go through all of these. We can go through them questions if people want. But I guess the thing which I did want to focus on is significant dealings. Almost everybody who's working on DDO says, what is a significant dealing? Now, we're not mandating or forcing anybody to use a particular definition. However, we're providing a fair bit of guidance in this template for distributors and issuers. And you'll actually see at the bottom, there's some objective criteria for what a significant dealing might be. So the bit above this is sort of just going through the legislation and regulatory guide, but then we actually came up with some objective criteria which might a distributor may wish to use when they're determining a significant dealing. So that's the this completed example based upon the template. I might stop there for the moment, and I think this might be time to hand over to Diane. Thanks very much, Diane.
Thank you, Michael. So that was very, very helpful to run through the TMD template, what everything means. I might just introduce myself for just a minute, and also my background of not only DDO, but what I've been helping Perpetual with, and then kind of run through a few of the insights and things that I've picked up along my journey, so to speak. So my name's Diane. I'm a director in our regulatory assurance practice at PwC. I've spent the better part of the last 18 months to 2 years focusing quite a bit on DDO. So I've spent some time overseas with my colleagues around the work around MiFID II that came into effect a couple of years ago. I meet with ASIC every 6 weeks or so and work through common questions in the industry, what we're hearing and seeing, as well as I've worked with, from a wealth asset management perspective, the large platform providers all the way down to the small asset managers. So I have seen the spectrum. I suppose what I've been helping Perpetual with for the past few months is doing a bit of a cold reviewer sense check on some of the initial TMD drafts that come through. So it's generally what I'll do is I will read through the PDS of a product and then form my own view as to what generally I think the TMD should look like, and then overlay that with what has been prepared, and then have a discussion with each of the asset managers working through, if I thought this, why is this in the TMD, and does that make sense? Many times there could be edits made to the TMD, or alternatively, it just goes to show where there needs to be additional judgment or rationale documented as to why a certain criteria was chosen, if that makes sense, which I'll speak to in just a minute. So I might just chat for just a minute around why is ASIC even requiring a TMD? Like, what purpose is it supposed to be fulfilling? So if we take a step back from it, ASIC's of the view that all products that are in the Australian market for retail consumers should fit the need, objective, or financial situation of the consumer. So products should not be made for business reasons, so to speak, to gain market share, et cetera, et cetera. The starting point has to be the consumer and what consumer need is being addressed by this product. The second thing that I think a TMD is very important for is it actually is the mechanism as to reviewing the ongoing basis of how the product is measured and distributed, so to speak. So once a TMD is set, it's actually reviewed with some level of frequency, as Michael talked about in those review periods. So it's not something that a product is created and 10 years later, somebody looks at it in terms of how many complaints have we had, do we have any issues with it, who's this product going to, et cetera. It forces the issuer to have some level of regular review. And lastly, I'd say that on the TMD, after going through how the product is actually designed, what class of consumer this product is made for, it then forces you to think about those distribution conditions. And also the issuer will need to think about what's called reasonable steps. So if you have a really complex, highly geared product, let's say, and it's currently available direct to retail, mass marketing, et cetera, the TMD kind of forces you to take a step back and think, is that really appropriate and are we comfortable with that? Which you might be, not to say that you can't have that type of distribution channel, but it forces you to actually prompt that thinking and document your rationale and judgment. So a few other things in terms of, I suppose, my reflections from working with Perpetual and also broadly across the market in terms of the TMDs that I've reviewed. There's a lot of focus on TMDs, and it is it's a pivotal document for compliance with DDO, but it is only just one component of DDO. And so Phil, I know, will speak after me for just a minute, but there's lots of different elements around the product governance requirements of DDO and other pieces. So I just wanted to highlight that it's one element, and there will be in the future, I would suspect, additional requests that Perpetual will have of you to help them fulfill their requirements as the issuer under these obligations. It's already been referenced, but these TMDs will be publicly available. ASIC, in conversations with me, has highlighted the fact that it doesn't need to be in simple language, that they're obviously going to be reading these TMDs, and from their perspective, they want to be able to pick up any of them and understand exactly who your class of consumer is that you're targeting with each product. And lastly, I do think from a perspective of how ASIC is going to do surveillance on this type of regime, this is not a black and white compliance exercise. It's not something that's check the box. So ASIC isn't going to come and say, why is your TMD different than these other two that are similar products in the market necessarily? They're going to come and say, here's your TMD, show me everything that sits behind it and all that documentation and rationale as to why those decisions and that final TMD is appropriate. So I know Phil and Charmaine and I have been working through with TMDs over the last few months, as I alluded to, and that documentation and rationale is a big, I guess, outcome or output of some of those discussions. A few more common pitfalls and things I wanted to highlight before I pass on to Phil to talk more broadly around DDO and Perpetual is many times, Charmaine picked up on this earlier, but the actual narrative in the TMD will just be copy and paste from the PDS. The whole purpose of the target market determination is to think about what class of consumer you are targeting and not necessarily just summarizing the product detail that you have elsewhere. So that's been a common theme, so to speak. The ASIC has given a number of examples of what they determine as high-risk products. And the examples that they've given are products that have significant volatility or leverage or gearing. So those characteristics should have more robust evidence-based and data that sits behind it as to why they think certain elements of the TMD are appropriate, and especially when it comes to those distribution conditions and reasonable steps. So with that, I'll speak a little bit more in the Q&A, but I'll hand it to Phil to give a bit of context around more broadly how DDO is impacting Perpetual in their response.
Thanks, Di. Sorry, technical issues here. I think I was on mute, but good afternoon, everybody. Look, firstly, thank you to Di, been tremendous help to us. So appreciate all the value that you're providing and the insights. And Michael, likewise, I thought that was a very good update. And you know, also a big call out to Shemaine, who's been working very hard on the TMDs. And it's a lot of moving parts for us. So please stick to the deadlines that we are asking you to follow. Look, my name and PGA was mentioned about 17 times in this webinar right now, so I'm going to do my best. But what I will say is that it's all about reasonable steps, right? So you'll hear different language in the market around things like this, but it's around, okay, what do people have in place now? What is reasonably going to be able to be enacted by the 5th, and what's the future going to look like? I think that's the important piece, right? This is principles-based regulation. This is representing a significant step forward in the environment. Things will evolve, right? So we don't want people getting into a fluster and a panic over things that are not in place, things that need to be thought through, because industry will need to work together. All of the participants will need to get on the same page over the fullness of time, right? So I think that's something very important to bear in mind. What I will say is we've heard some people refer anecdotally to TMDs being the tip of the iceberg for DDO, and that's correct. So our strategy was all about, let's control what is the controllable thing up front. Let's get on top of something that we can get our head around up front. Let's get the technology provided. Let's get the action happening. But the future of this and where it's heading is quite seismically changed from where we are now. There's going to be a lot more obligations coming down the line as people get their heads around the whole reforms. There'll be more and more changes, but this is the first logical step. So I actually feel that there is some merit to that assertion around that being the tip of the iceberg. But with the TMDs, today's session, again, referencing back to the FSC template, the FSC have done a fantastic job here on that, so thank you. The key thing for us, though, is it's all well and good to have a TMD documented, and it's all well and good to say that that's suitable, but if you actually look through the legislation, actually look through the regulatory guide in a lot of detail, an issuer, and in our case, where we're working with you as the manager, as the architect of the product, the person who decides the investment strategy, the commercial overlay of what's going on, it's around, well, why did I select that field? What is my rationale? What information did I look at? What critical steps did I go through? What are those measures? So for that, we are going to need to work with you to get more detail around that. Now, I've prepared a detailed slide pack that'll come out post this session today, which has got my preliminary thinking on how I'm going to position this. I just want to say on this front, though, given this is a core requirement under the law and it's the issuer's obligation, I need to sort of engage my board. I'm having a discussion with the board on the 30th of June around the specific content that we will need in respect of those, the rationale and any supporting recommendations. But the material I'm going to give you at the end of this session is basically how I'm going to be positioning it. So I wouldn't expect it to be too far off, but there will be feedback because it is us who need to be comfortable with the TMD and us who will need to sign it. So we will need to be comfortable with how that's being populated and the thinking around that. But as I said, I'm not going to go on about that too much right now. I have a deck that'll be sent to you. My commitment to you, though, is we'll have a much more detailed product governance session after my discussion with the board, and we'll look to do that in sort of mid-July. But I will talk about where I am going to position things and where I'm sort of heading. So there's some other things I want to talk about, not just about the TMD. So as we've been working through that, and we've been working very hard, going through all of the various pieces, things that we need to also be thinking about is the interaction between us and the platforms and the distributors. Now, I think I've said on previous webinars, I've had some good discussions with platforms. See Macquarie's come out with some comms to the market saying they need things by 30 June, just, you know, we've got that in hand. 30 June was quite a surprise to us, but we are writing to the platforms, explaining to them exactly what our timing is around FE. Those comms will go out today. Those comms will also be asking the platforms for detail on how they're going to comply with all of those various things you saw on the TMD that they need to comply with. So we understand anecdotally from some of the platforms, and one of them actually wrote to us with a very, very comprehensive document and a really good first step, saying, these are the things that we expect from you, and this is how we are going to work with you to tell you how we're meeting our requirements under the law. We feel that that's how things are going to evolve. So that's our first key step, documenting our approach, formally communicating to platforms, saying to them, we're open to working with you pragmatically, let's get that dialogue happening, but bearing in mind that reasonable steps is the overarching theme here, and Di may want to add to that, but that's the overarching theme. It is going to be impossible that every little bit of the RG and everything that anyone can think of in respect to this is going to be done by 5 October. It's around what's good from a consumer perspective, what's reasonable, and then all the future planning, right? So my session with the board will actually also be around, well, what am I leveraging now in terms of product governance arrangements? What are things that I can implement quickly pre-5 October to buttress what we're doing, but then what do I need to do on the long term? For example, if we look at section 108, so 1018A, 1 and 2 of the Corps Act in respect to this, I need to start thinking around the selection of distributors. And then what is the supervision and monitoring of distributors? So at this juncture, this is a completely different paradigm to what we're in. At the moment, I'm not involved in the distribution. I'm not involved in the selection of the distributors. It's investment manager is working with the distributors. They're working out how they want to distribute their product. We will need to start getting across an understanding of, well, how is that discussion materialized? Why is that distributor being selected? So it's all sort of intersecting this target market, and then how is the actual distribution going to happen? So that's the thing that is going to evolve. That is not going to be an overnight fix. Supervision and monitoring of distributors, again, that's why I've written to them formally putting them on notice that these are the things that you're required to do under law. These are the things as issuer I will need from you. But how do I work with them pragmatically? It's not going to work just issuing, directions and saying, I expect this. I want to understand their compliance arrangements. I want to understand their systems. I want to understand their resources. I want to understand how they're keeping across the change. I want to understand how they're monitoring that target market. I want to understand how they're reporting to me. This is all going to evolve, and that's how we're approaching it. Again, I'll be having discussions with my board around, what does this look like for us? How frequently am I going to need to meet them, not from a commercial perspective, but from an issuer and a compliance perspective? So this is going to mean that there is going to be a change in the relationships and a change in how all the participants are connecting. Also needs to be the appropriate due diligence that we need to undertake to make sure the distribution has occurred in line with the TMD, but is it in the right channels? So it's not, as I said earlier, tip of the iceberg is the TMD. It's all the stuff that happens underneath. So there's a lot of work that I need to do, a lot of work that Perpetual needs to do in sort of evolving towards what we need to do, but we've got a very strong foundation to do that. Again, first piece is, okay, what was the rationale and emphasis and data and critical steps that we used to actually make sure the TMD is right? Get that right, you've actually got a good sort of piece of the jigsaw sorted right there, because it's likely that the TMD is accurate. Then it'll be, well, what are the platforms doing? How are they actually meeting their obligations? What information are they giving me to actually tell me what they're doing? What are the system enhancement they're doing? What resources are they adding? How are they engaging their boards, etc.? So that is how we're sort of positioning ourselves for the next phase. So on that, yeah, so sorry, just give me 1 sec. Yeah, so we'll basically be seeking to collaborate and start communicating with them much more effectively, trying to get that level of understanding. Again, it's a seismic shift, and I don't have all the answers right now as to how that's going to look, but it's all about what's reasonable. And the first bit of reasonable in my mind is starting that dialogue and getting a good understanding as to what their systems are. And again, keeping that consumer lens front and centric to our approach. Other areas that we need to be looking at, in tandem. So I've got a really quite significant session with the board coming up, is review triggers. So our current arrangements is we look at the performance of the funds, we get the fact sheets. When we do our financial statements, there's an assessment of what's going on, but that's relatively rudimentary and it is in partnership with the managers. As you can see through the TMD, there's going to be much more analysis around how long has something been out of benchmark? What are we actually comfortable with in terms of sustained underperformance? Also looking into what is the attributions. So I feel that this is a place that will be evolving. I'm looking, part of the reason why thinking about engaging with people like FE Fund Info and other aspects that I'm looking at is, well, how do I effectively do that? And then what does that operating model look like with the managers in terms of, well, what are you telling me about your performance? What are your processes around the performance? How am I forming my own view around what is suitable, given that TMD and DDO, where it's heading around that type of piece? Significant dealings, there's some excellent guidance there from Michael, and he was spot on, because a key thing for there is going to be useful for us to get that information, but then we need to apply it through our own reporting processes to the regulator. So we have an established breach committee. What is that going to look like? If I'm getting a reporting coming in from a distributor, am I pumping it up the line through the risk systems? Am I going through that process to report? Do I develop a separate process? These are things that I'm workshopping with the board, and we'll come back to you on in mid-July. But we do have a pretty good understanding of where we want to evolve it. We have a very good understanding of what our current governance arrangements looks like, micro steps, then longer term steps, and we'll break them up into those three sort of key parts. Another piece here that is important is the promotional materials for the fund. So I think Charmaine may have touched on that. So we will be sending out our understanding of what a base marketing inventory would look like. Again, you are promoting your product and you are developing your materials. We will review at times and improve, but we'll be looking for you to run through that inventory guidance. We will work with our legal support to provide some wording to put into the disclaimers to refer to the TMD, because when you're seen to be promoting a product, you do need to be actually referring to the fact that a TMD is in existence. But we don't see that as an exhaustive exercise. We'd see that be quite a minor addition, but you will need to go through your inventory, and towards the end of this week or early next week, we'll get something out in regards to that. Likewise, in respect of the PDS, look, we're taking the view that when the PDS rolls is when we'll talk about the TMD, etc. Got some legal advice around that. I'm not seeing a mass exercise to roll all PDSs P6 October. So if that can allay any fears, I hope that has. So again, just emphasising that session with the board coming up on the 30th of June. I've analysed the RG cover to cover, line by line, mapped it to existing product governance arrangements, thinking about the enhancements we need to make. What are the short term? So we'll come back to you with more on that. But where I see the big thing for yourself is look at the information I can give you this afternoon, start thinking through that. That's the major bit of work that I'm going to need from you right now. Then next bit is thinking about taking stock of where your marketing material is. But with that, I think I'll hand back to Charmaine for our next section. Thank you.
Hoping everyone can hear me now. Great. Okay. Thanks, Phil, for that comprehensive update. As you can see, everyone, there's a number of moving parts, and we are doing our best to manage these internally and keep you out of as much of the, I guess, confusing decision-making as we can to present, I guess, a streamlined solution to you. So I guess now we'll go into a couple of the Q&As. Thank you to everyone who completed the survey before the webinar. To my knowledge, the survey is still open, so you can still register at any time and complete that survey. So if you could do that, if anything has come out of this session that you'd like more information on, it's just 10 questions, it takes a couple of minutes, and it's hugely useful for us in understanding where the knowledge gaps are. So please do complete that survey if you are able. I thought I might just kick off with a couple of the questions that have come through the survey, and then there's a couple of questions that Diane and hopefully Michael will be able to assist with. The first was just around the completion of the FE data file. Now, I did mention this earlier, and I was going to touch on it just before closing, to confirm there will be a requirement to convert the current Word draft version into the data file. Now, that data file will be sent out to the market from the 13th of July, and that's the deadline that we're able to make to send that data out to the platforms. Now, that will still be a draft TMD at that point in time. There is more work to do, as Phil has said, around our governance and any decisions that we need to overlay in that process, and that will come in due course. But to get the ball rolling and to give the platforms and distributors as much time to digest what your TMD looks like today and raise any questions, we are working full steam ahead for that 13 July deadline for the data file. The good news is FE will be providing some support in that space. So we'll be taking the Word documents that you have today, converting them into the data file, and FE will be assisting with that. They're actually setting up a landing page for clients to access some various guidance and resources. So that will obviously help you as well. We're hoping that they will have a bit of a video recording for you to use as well. This covers off on a couple of the repeat questions. As Phil mentioned as well, we know that platforms have put a number of deadlines on draft TMDs out in the market. And to the best of our knowledge, through a copious number of discussions with a number of different parties, we're not of the view that the submission of the data out to the market by the 13th of July is going to prohibit anybody from having enough time to digest the information that we're sending. So we're confident that that 13th of July deadline will be suitable for the platforms, including Macquarie Wrap. As Phil said, he is reaching out to them on an ongoing basis and will do so again. So that covers off on some of the questions that came through the survey. I wanted to just touch again on the critical assessment piece, Diane. I know you did touch on it briefly, and apologies, I was having some technological issues. I guess if you could just provide some further comments around the requirement to critically assess, and of course this will overlay into the Perpetual process as well.
Absolutely, thanks, Charmaine. So there were a number of draft versions of what we now know as RG 274, or the final design and distribution obligations. And one of the biggest changes, I would say, between an earlier draft version and the final version was ASIC's inclusion of what's called the critical assessment questions. So there's about 8 or 9 of them, and it's essentially a set of questions that after the TMD is prepared, forces the issuer to take a step back and respond to those 8 or 9 questions, and it forces the issuer to think about the consumer. So just to give an idea, the theme of those questions are around the purpose of the product. So what was it actually designed for? Past outcomes, what is the common past outcomes of similar classes of consumers who you're currently targeting, and also likely future outcomes. So just to give an example, one of the questions is, what does the data show around ongoing benefits, risks, and outcomes for the consumers at which you are targeting? So it's these kind of questions that really forces the issuer to think about the consumer and put the consumer's needs and I guess fit the spirit of DDO. And it really guides everyone to put the consumer at the heart of everything you do. So back to what we went through earlier with Michael, the critical assessment questions don't form part of the TMD that will be public facing, but it's a requirement for the issuer to respond to them and have them documented in terms of that rationale as to the conclusion that the TMD is appropriate.
Yeah, excellent. Thanks, Diane. And I think that's critical. Just checking you can hear me?
Yep.
Great. I think that is a critical point and one that I wanted to mention. Thank you. So, I mean, I think from Perpetual's perspective, as Diane says, the TMD is a public-facing document. But if ASIC were to knock on Perpetual's door and say, how is it that you got to this point? Why were the TMDs completed this way? And what other steps have you taken to comply with DDO? It's all of this background information, this memo that will accompany the governance process. These are things that we will point to. The process we've gone through with clients to ascertain what funds or classes are in scope, the resources we've provided to you to better understand those obligations. That's all going to be critical should ASIC come knocking on the door. And we know that they are looking to proactively, I guess, review this space. So it's something that we wouldn't be overly surprised by should we receive some questions in due course. So thank you for that.
I might just jump.
Diane, another one for you. Sure.
I might just jump in there, Charmaine, thanks quickly. But yeah, it's a good point, and the critical assessment questions are in my pack that are coming this afternoon is something that we want you to look at. There are some other things in there that we're asking you to think about, which is also the availability of information, which is at RG 274 spot 154. So what data points have you looked at? And then there's also things around appropriateness, which also links in quite nicely with the TMD. So there's quite a bit of detail coming in that pack. Sorry, I didn't want to, sorry to interrupt there, Charmaine. So important to make that point.
No, that's fine. Thank you. And so another question I had was, again, for Diane, and this has come up quite a number of times, and it was coming up in the early days of DDO and still continues to this day. The TMD given the impression of personal advice, or the existence of the TMD and its content, and some of the questions that sales teams or anyone that's facing clients on these particular funds, and the existence of the TMD, is that taken to give the impression that of personal advice?
A really good question, and it's a question that I think industry has grappled with for quite, frankly, since the final reg guide got released. Interestingly, I've raised this to ASIC a few different times, and it's not something they're particularly concerned about because they view the personal advice as very separate to DDO. So DDO forces the issuer to think about the class of consumer at which the target is, the product is designed for. It doesn't take into account personal suitability examples. So for example, it doesn't take into account that Diane is married and has dependents. It takes into the class of consumer or the bucket of consumers that I would fit in based on product features. And similar from a wealth context, what we just went through earlier with Michael around my investment horizon, my liquidity needs, my risk tolerances, et cetera. So it's not on an individual personal level, I guess is the first thing I would say. And that's where there was probably quite a bit of confusion, is that when this initially piece of legislation was drafted for consultation, a lot of people thought, well, this is just personal advice for everybody. But ASIC does not see it that way and is not intended that by any stretch of the imagination. The other point that I would make is that in the final RG, it's also clear that ASIC's provided an exemption for asking questions and how that doesn't constitute personal advice. So broadly, there's a few paragraphs in the RG that go to the point around if a distributor is asking questions for the purposes of determining if someone is in or outside the target market, there's an exemption that it is not personal advice and not caught by other elements of the requirements of providing personal advice. And some of the examples that ASIC has given in terms of ways to mitigate the end consumer thinking that they're getting personal advice through the distribution would be avoiding having the questions be asked by someone who's authorized to give financial advice. And an example of this could be that if one of your distribution channels is through general advice, if there's another point in the sales design process where you could capture this information and not have it necessarily be coming directly from the advisor. Another point that ASIC made is that questions could be asked later in the sales process after the consumer has already decided to buy it. So not something, once again, that's influencing the decision as to whether someone will or won't purchase or go forward with a transaction. And lastly, more anecdotally from a wealth perspective, I know platforms at the moment are spending a lot of time thinking through what questions they're going to be asking their customers when they log into the interface for the first time post DDO. And many of them are thinking about capturing 5 or 6 key data element pieces that would then apply to all products, if that makes sense. They would ask the questions once, understand the class of consumer and the key characteristics that are required, and apply that information to the future distributions to that end consumer. So it's just a bit of context there. Thanks, Charmaine.
Great, thank you, Diane. And that really does bring me to my next question. Michael, hoping you can share some insights around discussions that FSC may have had with platforms and perhaps their ability to adhere, as I mentioned earlier as well, to filters or distribution conditions such as that the product should only be distributed through personal advice.
Yes, thank you. Yeah, well, we have a lot of fund managers and platforms in our membership. So we've had quite a lot of discussions about how the DDO will work. There are numerous questions. That's just one of them is how do they work with distribution conditions? Well, I would say it's difficult. That really is quite a tricky one. So there are a range of ways that platforms are thinking of doing this. So I can't say that every platform is doing the same thing. what I'm aware of is some things which they're thinking about doing. So, sorry, this might take a bit of time, but there are a few options. One of them is a platform could take an approach of so some platforms are thinking about whether they would actually say that every transaction that is on the platform has to be done under advice. That's one approach that a platform actually could take. And so they might say it's if you lose your advisor, you have to stop transactions on the platform, or we've actually got this. We actually in-house advisors. So they as you may know, that there's been a sort of platforms used to have in-house advisors and now they don't, and so they actually might be having to create a new in-house set of advisors just so that clients who don't have advisors can now actually conduct transactions. So that's one approach. Another one is to, of course, as we've spoken about, we can we can have an actually, sorry, no, that's not right. What I'll say is there's another approach, which is to look at the attestations of that ASIC actually talks about in its regulatory guide about attestations of advice being provided before a transaction actually occurs. That seems like a fairly tricky one to figure out in practice. So that is something which the platforms are figuring out. So in general terms, platforms are spending a lot of time thinking about how they're going to take account of both the reasonable steps for unadvised clients and also the distribution conditions when they particularly say that the distribution is not permitted to people who don't have advice, but there's sort of no uniform common approach which we're seeing across the industry yet.
Yeah, that's excellent. Thank you, Michael. In line with what I would have said as well, and perhaps a little bit more informative. So thank you. We've also had another question around the approach to distribution agreements and distributors in general. Now, Phil did touch upon this, and as he said, he is reaching out to the distributors or the platforms on an ongoing basis, including shortly after this webinar. Again, just to make it clear, Perpetual will be taking the lead on that. We saw it as something, I guess, something that we could offer our clients, that we would represent our clients to try and form the best solution, representing a broad range of fund managers and funds. So this is something that we're looking to tackle, and Phil will we will keep you up to date on how that progresses over the coming weeks. But for now, the critical point is for any of the issuers or clients out there who are yet to complete and return their distribution mapping to us. That is critical for us in actually completing this task. So when Phil reaches out to the platforms, we need to give them a sense of the clients that we're representing. And in order to give them a sense of the clients we're representing, we really need that distribution mapping exercise. So for those who are yet to complete docs 3 and 4, I'm sure you're sick of receiving my emails and reminders, but they're critical for us in taking these next steps. So that's where we'd really like you to focus your time and energy at this point, in terms of getting the distribution arrangements in a state that will assist us in complying for DDO. That's really it from a question perspective. I guess I just wanted to move on to the next slide, which is a bit of a summary of the key steps, the next key steps. So I've divided it into both Perpetual and FE Fund Info, and that really is to give you an indication that there are two streams. Well, there's multiple streams of work going on at the moment, but in terms of client interaction, there are two key streams that you need to be aware of. As I mentioned, the first and foremost, most critical obligation for clients is to return their draft TMDs to us in the Word doc format. For those who are still uncertain about certain aspects of the TMD, that's not something that should get in the way of returning the draft to us for now. This is something that we will circle back to, probably more than once. So please just get the drafts back to us so that we can collate them and make sure that we've got a TMD that represents all in-scope classes of all in-scope funds. That's critical for us at the moment. Also, as I mentioned, docs 3 and 4, the distribution mapping exercise. And for those who are yet to complete it, please get in touch with FE Fund Info to provide your logo. That will help set the template of what your PDF TMD will look like for day one. Just so you know, we have a long laundry list of items that we're working on with FE Fund Info. The project list has, I think, 85 line items, and we're just making sure that we're engaging you on those critical line items. When we do set a request for something to be turned around in a certain time frame, the time frame may be tight, but it is critical that we meet those timelines. If we don't meet each of those independent timelines for each of those steps, that will severely jeopardize our ability to ensure that we're ready for day one, because each of those steps relies on the previous step. And I can't stress that enough. So following the provision of the draft TMDs to Perpetual in the current Word doc version, there'll then be, as I mentioned earlier, a 13th of July deadline for the data file formats, which FE will assist you in transposing the data from the Word doc into the data file format. That is how, that is the step during which the platforms will be made available of your TMDs. Now, there may be a process where we need to collate those TMDs and do a blast email or package them up and send them out to the market. We'll reach a solution on that over the coming days. A few other steps from the FE side. So there will be mock-ups of the PDF TMD made available to you and ourselves for feedback at some point in August. And in line with that August kind of step, there'll also be a demo of the FE solution. So we've talked a lot about what the solution will do, but this will be the step where you actually get to see it and actually understand what it will actually do and what it will look like, and how you go through the process of updating TMDs from a review trigger, whether it be periodic or ad hoc, or say you were to onboard a new fund, for example, what that process might look like in conjunction with both Perpetual and Financial Express. Stepping back over to the left-hand side of the screen, as Phil mentioned earlier, we're looking to share more information around product governance arrangements in the short term, and also share some more insights on the documentation to accompany the TMD around the July timeframe. And then following that, with a TBC from a timing perspective for now, Perpetual will communicate any required updates to TMDs after review. Now, what does that really mean? It means that once we've received all of the TMDs and understood what they look like, what we want to do is be able to take a top-down view of all of the TMDs, potentially by asset class or risk levels of a fund, and make sure that there are themes of consistency across these funds. Where there isn't a theme of consistency, then that might point to something that we need to delve into a little bit deeper to make sure that the responses in the TMD are as they should be. And we'll work with you on that process, of course. So I guess in conclusion, you will probably see some more comms on an increasing basis from me. Unfortunately, we are trying to do our best to tailor the comms so that clients who have already returned components of the required information do not keep getting bombarded by me. And I do apologise, but we just need to make sure that we're getting the information back from everybody. And as I said, there are a couple of clients out there yet to return documents. We don't want to see a situation where those clients are jeopardising our ability to meet deadlines for the rest of our clients. And critically, just pursuant to the conversation around some of the comms from Macquarie Wrap and Morningstar and other platforms, we are looking to publish final TMDs through the FE portal by 15th of September 2021. A reminder that the platforms will have seen your data file version before then, so that they can start to understand what that means. But that is our hard deadline on having final TMDs, and we've got a lot of work to do in between now and then. So if there are any other questions, please do submit them through the survey. Even though it's a pre-webinar survey, I'm pretty sure you can keep using that link. Or as per usual, please reach out to your client service manager or email the DDO inbox. I receive all of those emails and appreciate your patience in us responding to your various questions. Thank you very much again to Diane and Michael. It's been amazing having you on and having experts other than ourselves who are really not DDO experts provide some further insights to our clients, and really looking forward to progressing this to the next phase. we will definitely hear more from us on an increasing basis. But thank you for joining today. This has really been a really important session, and hopefully you can watch it a couple of times, share it with your investment committees and any of the committees internally that you feel will be touched by this process. And we can all progress forward towards that deadline. So thank you, everyone. Thank you, Phil. And thank you to our webinar hosts, and have a nice day.